G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Please be sure to check out my links below, including exchanges I use and social media content that I post. All right, let's go. So, welcome back to another weekly video, and this one's going to be slightly different to previous ones. What we're going over through at the start, and we'll finish up with the charts like we do always, but just the beginning will be slightly different. As I want to check in with the sort of real estate cycle and where we are in the current events that we're going through this year, and seeing some of the evidence to provide where we are. Okay, so first up, I just want to go over an article by the leading real estate channel, a news outlet, in my opinion, which is the one I follow, and I subscribe to their newsletter, and they are Property Share Market Economics, led by the great Phil Anderson. And just want to go through this with you, start off with the video. So let's go through this little thread that they've got going on here on Twitter. So several famous faces launched their own meme coins in May 2024, marking a new twist in crypto's latest craze. Less than a fortnight later, these tokens are trading at a combined fully diluted valuation of over $90 million. Bitcoin has always been a highly speculative asset, and its impact will soon become clear. Remember Paris Hilton, the rise of a strong bull market, and the launch of the iPhone that changed everything between 2004 and 2008. I was too young to remember that, but yeah, if you do, let me know in the comments below. Well, history repeats itself. Paris Hilton is back, along with other celebrities, this time with AI, and Bitcoin has transformative technologies. In addition, Trump and his First Lady, Melania, have joined the meme coin frenzy with their own tokens, Trump and Melania coin. Meme coins are a highly volatile corner of the crypto market. They often start as jokes with no intrinsic value, but can surge in price if enough people jump on board. Curious to learn more, and there's a link, okay? And that's his book, The Secret Life of Real Estate Banking by Phil Anderson. Highly recommend you get that book. It's an old one from 2008, but it's really telling to how the real estate cycles play out, and goes back a long, long time ago, okay? So it goes through every single cycle. So 200 years ago is when it started, 1800, okay, around that time, and that's when the government in America, because all these events he covers in his book are based in America, so land market there, and how after the government made it so that they had to purchase the land off them, and they granted you a license to do so. Once a government granted license was put in play, and obviously, purchasing land through them, and then subsequently borrowing money from the bank and so forth. When those government granted licenses were occurred, ever since that happened, we have had 18-year cycles in real estate, and booms and busts. Okay, so you saw in 2008, we had the big crash, GFC happened. So go to the next slide. This is what it looks like, okay? This is the cycle in its entirety. Okay, so we'll go back to the very start of the cycle. So the first half is 7 years long. Okay, so this is after World War II. Okay, there was an interruption between that happened in the 20s. I think it's 26 or so. 1926 is when it topped, and then it started to go down. And then you're saying, well, that's not 18 years. 26 to the bottom is 55. So you'd go to the top. Okay, it doesn't go back that far, but would have been 1926 would have been the top. Okay, on this chart, and you're going to 55 was the bottom. That's 30-something years, which is more than 18 years. You think, well, that's not 18-year cycle, is it? The only time it really deviated from the 18-year course was because of a world war. Okay, World War II happened then, and it shifted the cycle and didn't play out like usual because we had a World War event, okay, which is understandable. Besides the World War II event, the cycle has not been interrupted, okay, for the 200 years it's been around, or 220 years, because we're in the 2020s now. Okay, so we'll start at the start at 55 was the bottom. At 75 was the bottom. So roughly, it wasn't 18 years, it was 20 years. So it's not exactly 18 years. That's the average length of the cycle. And then 18 years after that was 1993, 75. And then 18 years from that was 2011. So you can see it's pretty well around 18 years on average. Not exactly. Okay, I'm just letting you know that it's not so obvious. And if it was too obvious, then everyone would know about it, and then everyone would definitely time their investments. But it's not supposed to play out exactly the same in terms of time it goes. Okay, so that's the bottom. 7 years up, and we've got this mid-cycle slowdown period. Okay, so we've got around this time we had 61. So 1960, 1961, there was a recession then. 81, there was a recession. 2001 recession, and 2020 recession. So these are all recessions. So this highlighted blue, and you can see in the bottom here, it says recessionary periods, okay? So these were recessions, and we had a bit of a mid-cycle slowdown. Now, we had the first dip there, and this chart suggests that we have a second dip. Sometimes you get another dip. So in this instance, we had 2020, the crash, the pandemic crash, and we had the dot-com bubble, of course. Early 80s was pretty bad, and then early 60s and that. But besides that, we had another one here. So it accounts for any other dips. So you have a double dip here, or if it's one singular dip. Right, more recently, this occurred in 2022. We had that 20% correction in the S&P when the high inflation came. Okay, so we had to have a correction in 2022. So that'd be around 2022, end of that year, near the bottom of this chart here, looking at recent times, and also pretty much coincide with, like, for the 60s, it'd be 66, 67. There was a bit of a crash in that period. It wasn't a recession, but it was a definitely a big correction then. 87, there was a stock market crash. If you go back to the 80s and mid 2000s, there was one in like 2005 or 6 or something. There was a bit of correction. Okay, and leading up to the mania. And this is not exact. Okay, so these are not exactly like 2 years later. It can play out here. It's not perfect where these mid. This is sort of pretty consistent, this recessionary period, but this secondary dip can play at any time. Okay, so that's a variable aspect, so it's not exact. That's why it has no years written down here. There's only years written down for this one, not the second one. So that's an optional dip there. But there's always dips in the stock market. Okay. So anyway, rambling on. That's 7 years, and after that, another 7 years. You get through all this second half of the real estate cycle, and we get the winner's curse phase, which is the very vertical part here. Okay, basically the last 2 years of the winner's curse phase, which is the top. And right now, from 2023 or so, or where you want to count that one from, 2024, if you want to count that from 2024, really ramped up, and going into 2026 roughly is where the peak should be. So it says here 2025, 2026 should be a land peak in all real estate prices. This could be global, this could be certain parts. It's not exactly saying which markets will top first, because certain markets and certain areas in real estate top before others. So I'm not going to go into the details of which one's going to top first and like that. This gives you a barometer over global sort of stock markets, okay, and I should say real estate markets. This is a real estate cycle. And and we said 72 was a peak, 89, 2007, okay, so the great financial crisis, and one coming up. Okay, so we had some pretty big tops there and pretty nasty corrections. So in the 70s, the mid-70s was pretty bad when you had the Republican president Nixon in charge in America. And in the 80s would have been, I think Reagan was in then. And then going into that recessionary period was George Bush, the father of George W. Bush, George H. Bush. And then you had 2007, which was his son, okay, George Bush. And then now it's Donald Trump. Okay, so as much as Trump seems for the people, definitely plays into the real estate cycle, and the mania phase is very, very well suited to his liking, because this guy's a real estate developer, and yeah, he wants the best for the land market. So any to ease conditions for buying real estate will definitely occur in this section here. Okay, so approaching this final peak period 25, 26, and we get a major recession which lasts on average around 3 to 4 years. Okay, as you can see, there's a bottom. It goes back to this here, 75. Okay, 993, 2010 to 11, and 2011 here. Okay, so it's basically this is just this. Okay, so it just continues this cycle over and over again. And the next one, we should see a bottom between 2029 and 2030, according to this metric here. And it doesn't mean the stock markets will bottom that soon, but it means the real estate market will take a long time to recover, and it'll definitely bottom and be down for quite a number of years. The stock market could bottom within 1 or 2 years. Doesn't have to follow this. And the stock market will lead the real estate market, okay, out of this recessionary period, okay, eventually. And it'll probably peak after the real estate market's peaked. I don't know exactly when it's going to peak, but usually this down period happens that the stock market leads the real estate market out of the recession. All right. So all courtesy to TIA Crypto. They've got a good channel going on there. If you want to follow those guys, it's up to you. There's a chart they've remade for property share market economics, which is these guys here, okay? So they drew this chart up, but these guys have just sort of reformulated it and made it really simple. And yeah, so that's based off Mr. Akhil Patel, which is one of the founders of property share market economics. He drew up this chart back in 2016 or so, and ever since then it's been playing out pretty well. Okay, so he's done very well with this chart prediction. So that's the real estate cycle. And we are currently, obviously, where we are currently, it's quite obvious. We're in 2025, so we're right up to the top. We're very, very close to a peak. That could occur late this year or into 2026. Okay, it's not certain when, because it's certain variable factors. All right, so we're definitely in the winner's curse phase. So I would not be buying real estate in this period, okay, according to this chart, because you can get caught in this big collapse and recession, and it would not be good if you've got a lot of debt. Okay, so having a lot of debt and coupled with recession and banks calling in loans, you're screwed. Okay, you're not good. You'll more likely default. So just be careful there. Okay, don't go too risky and too much debt. So get prepared for this period. The down period's going to come, and that lasts 3 to 4 years. So you can be dealing in a bad situation for a very long time. So just don't get caught up in that. All right. Just let you know, not financial advice. But yeah, this has been playing out for so all the years, and even goes back even a lot longer than that. Okay, 220 years of history. So don't fade this chart, right? And that, and we've got the crypto greed and fear index currently at 46. All right. So yesterday was 27. So wow, big difference to what we're seeing today. And then last week was 28, and then last month was 50. All right, just growing this, and you can see basic month back and in the 40s and 50s, and then suddenly bam, late February we're at 10, came back up, down 15, and we're slowly making higher lows and higher highs, and it seems to be trending up as prices obviously going up too. So that is 1 month, 3 months, still in a downtrend on the 3 month trend of the greed and fear, and we'll see how long this uptrend goes on for before going back down again. So I do see this going down again with the price, and I'll show you in the next chart why. And that is the fear and greed. It's sort of pretty neutral at the moment. Okay, yeah, it's fear to neutral. Neutral's 50. It's a little bit below neutral for Bitcoin, representing the whole crypto market. And this basically just reflects volatility. It's 25% of it. Market momentum and volume is 25%. 15% social media. We haven't got surveys at the moment, so it's currently paused. Bitcoin dominance, so I talk about a lot in this channel, and 10% trends. Okay, so Google Trends data is mainly what they use for this metric here. Okay, so that makes up the fear and greed index. I'm back now to the charts. All right, so we've got Bitcoin here on the 3-day time frame, and we can see we are in a downtrend quite clearly. We had a top, inauguration day was a top, which is quite interesting. Everything was priced in, perfection was guaranteed, and the market was really, they couldn't get any better news. That was the top, the best news for the crypto market. And when everything's priced in, we have a previous high, and you can see we've swept it. Okay, so it's quite clear. You can see we sweep the high here. See how it's higher than that one. Once you sweep a high, it usually comes lower. Okay, so that's been swept ever since that inauguration day. We've been going down. So that lower high, broke this support level at 92k, came down here around 80k, and then up again on another tweet by Donald Trump, and then back down again, make a lower low to this one, and then we're pushing a bit higher. Will this result in another high that comes up to the early 90s again, or we just get rejected around the mid 80s or so, just to fill this area in this candle, and then make our way down to the bottom? I do see us come back down to the 71.5k level. Reason being, as I do see we're testing the previous high, so 2024 high, and you can see there quite clearly where it is. Tap, tap, tap. All right, so we want to make sure that it's this area here filled, okay, and it just comes down, retests, like a nice healthy retest, okay, and the trend can go higher after that. So you want a nice bounce from this level as well. I don't want it sort of going below it and staying below it for a bit of time. We want it just to, if it's going to go below it, it's going to wick, like really quickly wick, okay, like this, and then do something like that, and then go higher. We don't want it going much lower than this. This is downward sloping trend line to get to the early 60s, because it's really in danger territory. We want to quickly wick it and then come up, all right, and hold this level as support and continue higher, all right? So you can see all-time highs and break this 100k level and get it there pretty quickly, okay? So get this over and done with, and go on the weekly time frame. Looks nice and neat now, and yeah, you want this to happen, okay? I'll get rid of these drawings for a sec. So that's, and the reason being is we saw something similar back in 2017, okay? We go back on the logarithmic chart, go to 2017, and early on in that year, you can see around March period, we had a correction, okay? And before that, we had a correction to the 2016 high. So there's 2016's high here. If you go across, you can see very closely here that in 2017, that we in January, it was actually early in the year, they really tested this level, all right? And then went higher. Wicked a little bit below, see it wicked, then it continued up, and just grinded higher and higher and higher. Had a lot of corrections on the way, and these corrections were pretty brutal, okay? So they weren't easy to get through. The 33% corrections. This one was 38, as you can see there. This one here was a bit bigger, I think. Yeah, 40%. This one was shallower, 30%. We had these multiple corrections along the way, all right? And the correction that we got here, that was January to early January, to retest the high of the year prior, the halving year, was a 34% correction. So quite a big correction we've gone. It was a smaller asset back then, okay? And it was only around $700 back then, which is very, very tiny compared to what we are now. So you had multiple corrections along the way, which is important to note, okay? I want to make sure you understand that. And current day period, the current correction we're experiencing from the organisation high to now is only 30%. So we're nearly in line with what happened in 2017. But we see a little bit more correction, is about 35%. So it's not much more to go to really test this level, okay, and test these highs. So we did, this is the halving year, and then back in 2016 was halving year, 2017 tested that one. So I'd see us doing the same thing this year round. Worst case scenario, we get a 40% correction, all right, down to this lower diagonal line, okay, which I don't want to see that at all. I want a wick there and then continuation up. 35% is probably the bare maximum from this wick high. We've got inauguration day to now, all right? So that's what I see wick on. And you can see the MACD now, and we are going lower, pretty noticeably lower. Go back to the 3-day time frame, my favorite time frame, and get off logarithmic mode for a sec. And MACD is in this oversold territory, as you can see there. So quite low. We might get a bounce soon, which is what we're sort of getting now, sort of front running this cross. Because this could cross at any moment. This could really, this orange goes above blue. This is bullish, okay. This could continue to bounce, and then it could ultimately go lower, okay. Even though this is cross oversold, what really happens here is I'll draw it a bit better on a, well, it was actually not too bad on that on that drawing tool, but really what happens is you get something like this play out, okay. So crosses bullish, crosses bearish, crosses bullish. All right, see that? And when this happens, I get a high or low on the MACD, and we'll just mirror price. Price will go up, price will come down, okay? And then price will go up. So what's playing out here, as I mentioned in the previous video, is we've got lower lows, okay? So price is going lower, but the MACD is going higher. So what's that say? It's called divergence, okay? Bullish divergence. And it should really mark a bottom and continuation higher. If we get this occurring at the 71K level, that'd be fantastic if it does that. I'm so happy. And coincides what we're going on right now is we're getting a very, very reasonably low risk, sitting around 29 now on the risk level, just entering this green zone, which is historically pretty, really bullish. Okay, so you can see here, a nice low here, a nice low here, as you can see, and we stayed down below and continued very, very oversold. MACD already went below, okay, and we made a, well, I wouldn't say divergence because the price was going higher. I wanted to make a higher low, and MACD went higher. Okay, so that was divergent, sort of divergence, but not really. But yeah, nevertheless, I'm showing you what happens when price gets down to these levels. It's low risk. Happened back in the summer of 2023. You can see there, nice and low. And the very bottom was down here, of course. And all this. And you go back to the previous post-halving year. Okay, so the bull year. And all this pretty much. Back to the green. And we got this nice buying opportunity before we went higher. And boom. So that's that. Okay. And yeah, you want to sort of wait for a bit more confirmation that's really entering the zone. And we get this nice divergence playing out. This is what I see happening. So I do want price to come down here. Another reason why I want it to happen is not only to retest this lower high, so it's a high from 2024. Also, it's another reason why is Ethereum. Okay, so I've got an Ethereum chart now, and I do see this thing in the middle of nowhere's land. Okay, so they're pretty correlated, Bitcoin and ETH, but ETH showing a little more weakness than Bitcoin. All right, because of what's going on with the Federal Reserve and their balance sheet, and usually ETH shows some weakness against Bitcoin. All right, so and in USD it really does show on the standard USD pairs. So I do. So you can come back up here and then down. All right. Reason being, probably comes sooner than that. Actually, I'm seeing around April. Next month we should come down to these lows, $1,500. We could go lower. There's always definitely a possibility that we go to $1,200. Somewhere around there is definitely reasonable. Yeah, so there or there, it doesn't really matter. I do see it coming down to make it a nice macro high or low. So you've got the obviously the ultimate low in the bear market in 2022, but making a low between these two zones. Okay, and either here or here, and this will be higher than that one. Okay, so that is a macro high or low. If I go on the 2 weekly time frame to show you what's going on, as you can see, that obviously it's higher than that level. So it's still not the end. Okay, so as long as we make a macro high or low, and we come down, retest this trend line here. So we started here, here, and make one more retest. It should continue up. All right, and set it higher, and ETH should be strong again. And we should see some momentum for ETH going into the end of the year. I see it being really bullish, but we need to make this move down and bottom out completely, come back down to a support level. Okay, it's the middle of nowhere's land at the moment. This is a support level. It's really interesting on the 2 week time frame, and the next one comes down here at around the 1200 mark. So either 1500 or 1200. I don't know exactly. Hope for the best, plan for the worst. That's all I can say. Yeah, it's quite common. And you can see the MACD on the 2 week time frame, and it's very bearish. Okay, so very bearish. So the highs were pretty well equal here. All right. So that was a flat sort of reading. So flat top, double top pattern, and then you got the MACD going down. So that's bearish divergence. And we should see this thing probably come down to the lows. All right. Make its way down here. And then before we cross bullish. Either here or here, and then boom. off to the races from there. Yeah, that's how I see it playing out, along with the MACD and momentum. And you can see that pink's really dropping hard. Blue's got to catch up and follow it down. So a bit more downside for ETH, and that Bitcoin should come down too, because if Bitcoin goes up and doesn't go to that 71K level, then I don't see ETH going any lower, because they're pretty well correlated. Okay. And that's that. All right. So that's those two. And really, the chart to look out for is total free minus USDT divided by Bitcoin. Okay. So I don't really look at MACDs and oscillators for this chart. This is purely top and bottoms. It's like an oscillator. So you sort of go, you had the lows, the range lows around 25%. You see 0.25 of Bitcoin's market cap. And we usually come up to the highs. It can deviate above, like I did in 2017. Quite clear there, went way above it. It went to like 1.34 of Bitcoin's market cap, but usually is parity with like 0.991 of Bitcoin's market cap. And the 2021 cycle, we just got up there, like 0.99. See that? 0.98. So quite a bit lower than the 2017s. Didn't make a higher high. It made a sort of slightly lower high, unfortunately. And see the lows again, come back down. QE begins and then makes a bottom, makes a fake out, and then it shoots up and hits the range highs. And now we're sort of stuck in middle, not the middle, but sort of in nowhere's land. I want to see it come back down here. So basically, fully bottom out. Old coins, except for Bitcoin and ETH, minus USDT, divided by Bitcoin. All right, the market cap, come back down here. QE starts for the Fed to put the money printers on, or whatever you want to call it. The balance sheet, it's all a balance sheet, really. The balance sheet, buying of bonds, more or less, or they just do nothing. The balance sheet, they just stop selling it off, and that's enough to really find a bottom for these old Bitcoin pairs before going up to sometime. I see it going into the midterm year and hit the top of the range. Oscillator, essentially. This has to happen first. When this is bottoms, then you can start looking at altcoins, but at the moment, it's not there. So I'll be waiting, and definitely some more pain has to happen for us to get down there, okay? All right. Same with others, Bitcoin. So it's coming down to this green box, okay, in line with total free, fully bottoming out like we did back in December 2020 when QE started, back in 2019, 2017 lows, and then obviously went to the highs. We made higher highs for others in the 2021 cycle, okay? You can see this was a higher high. This is outside the top 10, okay, coins, and made a higher high, but total free didn't. Made a sort of lower high, so quite different there for some reason. Will we make a higher high? I don't think so. I think it's not going to go as high as that. That's sort of the hard part, but using total free as a gauge to know when others will top is probably a better idea. It's using this chart just to see where it'll top, okay, because they should top at the same time. They got others against the total free chart, so basically top outside the top 10 versus the top 10. Yeah, you can see it's falling off this upward sloping parallel, I should say diagonal trend line. All right, and it's going down to the green box. Okay, I want to see it come down here, bottom out, and then up here around early 2026. Yeah, that's what I see happening, and come back into the obvious range highs back in 2024, the bull market in 2021, and early in that year 2021. So the two peaks in 21, and I see it come back up to that point again. So that's that one. And for the Bitcoin pairs, we'll finish up on ETH Bitcoin, and you can see it's dropping like a rock right now on the 2-week time frame, and we are just dropping. But we're inside this green zone now, so we're getting very close for Ethereum. It's interesting. We'll bottom at the same time as total free and others. Very, very interesting to see. Did that back in 2019. They all bottom at the same time. Okay. But yeah, interesting to see if they all bottom at the same time, or we get like a double bottom, and the others, and they'll bottom here or something like that. I don't know exactly when, but going up to here. I reckon it's going to play it a lot sooner, in my opinion. Who knows? Bottom mid-year or soon. And then, yeah, boom, up to here. Yeah, and hit the range highs like it's always been doing. This is the ETH Bitcoin market cap. And yeah, it's an obvious oscillator. All right. And it should just really, it's playing out as expected. And then boom, you go to the top. So, and that'll really occur when the Fed balance sheet changes. And I'll quickly show you the balance sheet because I haven't showed you at all what I'm talking about. And that's just this orange line, okay? So this thing basically bottoms right when ETH Bitcoin bottoms. See that? They're both bottom at the same time. They'll both go up right to the peak. Not exactly perfect. All right, so don't bite my head off. So it's around the top, okay? A distribution pattern playing out here. So you have multiple highs, okay, distribution, and then went lower. When this balance sheet durably reduced, okay, durably went down like this. What happens if ETH Bitcoin underperformed, okay? And it should bottom when this thing either flattens out like this, nice and flat, or goes higher, yeah? I don't know how drastic it's going to be like that. It's not going to be that drastic, but you get the idea. This will have to play out for this to bottom and go higher. All right. So you got to line these things up, the balance sheet and ETH Bitcoin, because they're pretty correlated. You can see back in the period we had QT, which is what's happening right now. When it was going down, ETH Bitcoin was going down as well. Okay. So yeah, it's pretty well correlated. Not perfect, but it's a good gauge. Watching the Fed, what they do with the balance sheet is when you'll know when these things are bottomed out. And that'll include total 3 minus USDT to our Bitcoin. This should bottom out as well around the same time. Others against Bitcoin. Others against total 3. Okay. Minus others. So top 10. So outside top 10 versus the top 10. So all these charts. And even I mentioned this one, but total 2, which is ETH included. All right. So this is coming down as well. And these orange Fed, balance sheet. And it's not doing very good at the moment. Oops, looking horrible at the moment. Sometimes this happens; you lose a chart. Yeah, you get the idea. Okay, so this should bottom out as well. So all these charts, and Bitcoin dominance is pretty well the opposite of all of them. All right, Bitcoin dominance is going higher. It's doing the opposite. Bitcoin's taking the market share from the altcoins. That's what happens in these monetary environments. And we won't see a top until the balance sheet changes, okay? So quite the inverse of what's going on. We have reached the yellow box area, okay, which is basically take a Fibonacci retracement from the top to the bottom. That's like a 0.618 level. We are piercing well above that. And I do see us going to the 0.786 now. We have sort of violated this box, wicked high above it, and it looks to be pushing higher. And definitely see up here now. Okay, sorry, I've already drawn a line there. 0.786, 66% dominance is where I see it topping out. Okay, so that is that. We'll go to the stock market real quickly and have a look. So had a nice day, 2% up. Okay, on the daily time frame. So you see the nice green candle there, so quite bullish. But we are below this support line that I've drawn, which is these tops here. So we are below this on the S&P, top, and we are below it, which is not a good thing. This could be a retest and continuation down, or just a deviation below, and then we could reclaim this level and go higher. I don't know exactly what's going to play out with the S&P, but I will say this. We have a low here. So 2 lows here. So you can see this little tiny little low here and this low here. Okay, so quite evident there. And we could see more downward pressure. Okay. Let's get rid of these drawings real quick so it's nice and easy to see. So yeah, we can definitely see something like this play out, come down and fully bottom. Now we'll see Bitcoin and the rest of the market down lower. Bitcoin at 71K, and then it looks to go higher from there. Yep. So I definitely said this could be definitely a macro low. The worst case scenario is we come down to this low here. Yeah, 5,100. 5,400 seems more likely. All right. Want to be in a bull market still? That would coincide with roughly from the top here to the bottom, a 12% correction, which is nice and healthy. It's not a bear market correction, it's a bull market correction. And that could definitely play out. All right. Don't want anything more than that. We don't want to see Okay, I'll go back to this tool. Which one was it? This one. I'll fix this up. But if you go into this low here, the very top, okay, that's a 16% correction, which is entering very close to bear market territory. So 20% is your bear market correction. I don't want that happening at all. That'll be pretty well it. If it does go that low, all right, the S&P just drops like a rock. You know what happens? It won't make a high. It'll make a lower high and then go lower. All right, in a recession, which is a terrible thing to happen. But that's what really happened. That much momentum to the downside. It won't get enough upside, and then we just lower high. This is not good. So you want to see a bounce from this level, okay? Something like that. That's only a 12% correction. Okay, so it's playing out like that. Everything else is pretty well the same. Yeah, and that's pretty well it. Bond market's a bond market. It's sort of bouncing from this level, 4.15. And so seeing if we'll stay above it or not. It's quite interesting to see the bond market. A weekly time frame now. Will it continue higher and hold this low? It has to hold this low to stay in an uptrend and target this high and sweep it before going lower. That's what I did predict to happen. But who knows? This could just be the top and a fake bounce and then back down we go. So anything play out with the bond market, I'm not really concerned. I'm just more concerned about the S&P, the levels of the S&P, like I showed you here. It's nice and evident to really bottom out completely. And also, more importantly for me, my investing style, the crypto market, is see Bitcoin come down to 71.5K, retest the 2024 highs, and go higher. Yeah. And that is pretty well it for the video. There's plenty of other charts. I'll go over them another time. But it sort of sums it up. USD dominance is trekking higher. Okay, because we got this double bottom playing out. Okay, and I did say this on the channel. It was just going to play out. And it has happened as it predicted. So it wasn't surprising to me. Seeing higher price action is sort of the inverse of Bitcoin. So what Bitcoin does, this does the opposite. Now, if Bitcoin goes to 71K, like I'm predicting it'll go, I do see this going up to the orange box, okay? They'll see Bitcoin at 71K, and then bull market is on after that. And I'll see Bitcoin and the golds go absolutely nuts. But I want to see this go to the orange box, which is quite clear to me, as you've seen multiple tests inside this area. Okay, so that is where I'm seeing it go. USD dominance, and that's it. All right. So I hope you enjoyed this video. Bit of a longer one today, nearing the 40-minute mark. Just going over something a little different this time, talking about the share market economics, or property share market economics, I should say, and their great content, and going over the real estate cycle and where we are in that. It's very important to note what we're doing now. So if we look at the, it's all about sentiment, okay? So sentiment out there, seeing what events occur. Like I can go in more depth with what they post because they post some good stuff. I looked at their charts, okay, the next slide, which is way more sort of interesting, looking at a visual representation of the real estate cycle, its booms and bust period, going from the 4-year down period and then starting a new cycle and the 7 years, and then we had a mid-cycle slowdown, okay, and then which could be a double dip or single dip, and then 7 years up. All right, up. She go up across this way, and there's 2 years of that 7 year. You have more vertical, which is the mania phase, before going down. All right, and we are in the 2 year mania phase part, which is the very, very end of this cycle. So anywhere from end of this year to 2026, we'll see a peak in the real estate markets. According to that chart, it goes back. I didn't show on the chart, but it does go back 200 years of history of land market values. So, and that's for the US particularly. Okay, but the world global real estate markets are slightly different. But because the US is the most dominant power, usually it does sort of it occurs in different areas of the world at near the same times as the US. Okay, because they're the most dominant power in terms of global trade, in terms of global economy, scale, and the currency. So, and that's how it works. Okay, as long as they're in power and they're in charge, they're the world dominant power, and we have the same people in charge running the countries and the same policies, we will see these real estate cycles continue to play out. All right, given that we have a government-granted license to acquire real estate, and we allow for the speculation of real estate values through loose borrowing conditions, and when these gets excessive and banks start calling in loans, what happens? We get a bad depression or a recession. Okay, so yeah, and then that affects real estate prices for roughly 3 to 4 years of a down period, and that trickles in the stock market and crypto market and every other market. So crypto hasn't really been through one of these yet. This is the first time round we're going through a land-led recession, which is better to happen. Okay, I don't know when, but in the next year or so, if you're playing out, it'll be devastating. It'll be brutal. It'll be interesting to see how that holds up and who survives it, because it hasn't been through one before. Because Bitcoin began just coming out, basically, it began in 2009, Bitcoin did. So right when the stock market bottomed in the last real estate cycle downturn. So it was birthed out of that, and we're going into the end of that cycle, 18-year cycle. So yeah, and we just went over some other charts, dominance charts, Bitcoin, altcoin charts, stock market, bonds, and yeah, pretty standard, simple. I did see 71K being a support level of Bitcoin. I did see ETH going about 1,500 to 1,200, depending how things get. But I don't see it going any lower than that, like a wick to 1,200 or bottom at 1,500. Seems very, very reasonable before going high up into the end of the year in 2026 potentially, if the cycle does play out a little bit longer. And given what happens to the real estate cycle as well. Okay, so it's really dependent on that, because it's really a big it's a big part of the world investment. Okay, it's a big part of where liquidity is, and yeah, speculation can continue longer than you expect. All right, so be wary, don't go too risky, and yeah, just get your affairs in order, make sure you've got not much debt, everything's under control, because this downturns will be pretty brutal, so just be careful. All right, so if you enjoyed this video and the content I can keep putting out, and I want you to keep supporting me, because making these videos, giving as much as I can, and I'm doing it for nothing, okay? So sharing this knowledge for the kindness of my heart. Please, I want you to smash the like. I want you to comment your thoughts below. I want you to smash the subscribe button, okay? I want you to check out the links below, and I'll catch you in the next one. Cheers.